Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you, of course, on Monday evenings as we delve into everything that happened on markets during the week that was and look ahead to the week that will be. Before we get started, we'd like to talk about the disclaimer, which says that everything we're going to discuss tonight is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this very general advice, you should consider it carefully within your own personal circumstances, objectives, needs, and seek the help of a financial professional if anything seems a little bit confusing to you. It's always important to also remember that trading, investing is risky. You could lose money. You're probably going to lose money at some stage. And we need to know how to have strategies to protect us in the markets. That's what we're about in live market analysis. Trading, I should say also, it's you who's responsible for the stuff you do and not me. Without further ado, let's get into tonight's proceedings, which involves you asking a bunch of questions and me hopefully answering them to your heart's content. Stocks, bonds, crypto, commodities, indices, anything I can get a chart on. Let's do that analysis, or it could be anything to do with the 3 M's of trading, so methodology, money management, or mindset. Let us kick off tonight by heading over to the Nasdaq chart, and we're going to do our portfolio management model, which determines how much of our overall capital we're allowed to risk. And we move in 1/3 increments like we do with many of our sort of risk management themes. At the moment, correct me if I'm wrong, but I'm pretty sure I should check the tape before we start. But I'm pretty sure we were full risk position last week. I mean, I think we were looking at a candle. If we go back 5 candles, 1, 2, 3, 4, 5, that's the candle we were looking at, and therefore we were obviously looking at as good as you can get just about in terms of white candles, return to high peaks and high troughs, light green ribbon, dark green ribbon, and very close to the supply zone there, and not really showing any signs of supply side control, or on the other side of the equation, only showing demand side control. Fast forward 1, 2, 3, 4 days, 4 trading sessions, that is up until Thursday, and everything still looked fine, even with Thursday's lower shadow, and then Friday appeared. Average, just slightly above average volume, obviously significantly above average volatility. This is the, I used to say ATR, and which is, I realised after just going through some of my old formulas in here, some of these old formulas I have sort of lying around, that it's not really an average true range, because it's a 1 period true range, and then it's not really the true range that's in your textbook that I think maybe Wells Wilder came up with, because I didn't like his. I do mine a slightly different way, so I call it an optimised true range because I've optimised it from what the original is, and it's basically true range, but taking into account gaps and things like that. But it for me represents bar by bar volatility, so that when we can look, or when we do look at, that's not right, when we zoom out, and it's a bit like volume. We can see above average volume, and we can see above average volatility, because that's what we want to see. We want to know when something really interesting is happening in terms of volume and volatility. So that's why I have them as bars. I can't think of anybody that I've seen on the entire internet or in any technical analysis textbook that actually does volatility like that. But hopefully you agree it actually makes a lot of sense. So when is there's something really interesting going on? And yes, that is above average volatility, above average volume only slightly, but and the price action obviously is total supply side control, big black candle. Not ideal, not what we want to see. It took out the dynamic demand that we normally associate with the short-term uptrend ribbon, although having said that, the short-term uptrend ribbon is a null and void when you're doing A shapes and V shapes on either side of it. The long-term uptrend ribbon is far more important though, and I would expect it to continue to hold and do its job, much like it has done with the Nasdaq really since this trend began all the way back in 2023-ish, 2-ish. So yeah, look, futures are up tonight. They're up about 0.4 to 0.5%. So we're going to start on the right foot. The important thing is that we finish on the right foot as well. So we don't want to see an upper shadow selling into any rally that starts at the open. We want to see it, nice white candle or a downward pointing shadow, but it's definitely not a black candle, definitely not an upward pointing shadow, because that would spell confirmation of Friday's move. And you're going to get Friday's big black candle in bull markets. I mean, there's one there, there's one there. And to be fair, look, that one had a little bit of a follow through, but not much within the context of the overall trend. And this one had barely anything. And the Nasdaq is prone to them. Sometimes they're a little bit more sinister. And that's why we're going to be, I guess, alert, but not alarmed at this point in time. So we don't want to see a confirmation candle. What does it mean for our portfolio management? That's why we're here. Look, I don't think that candle in and of itself is enough to change it, but it's not far off, because it is significant significant volatility, above average volume, and a very, very decent supply side showing in the candlestick. If I was to see another candle like that, or even a candle inside that one with an upper shadow, I would take the precaution to move to a 2/3 risk management model. So that's the crux of that. Heading to Australia, and yeah, look, same as last week. I'm pretty sure that was last Friday's candle, because we had a Monday, Tuesday, Wednesday, Thursday, Friday, a terrible week if you've been reading my market index updates. Very frustrating, pull your hair out sort of week on the Aussie market, but not inconsistent with the other, the technical term is shit, that we do. To be fair, in Australia, when we make new highs, it's pretty common. It's very frustrating, and it's happened again. But today's candle, again, as I mentioned in my evening wrap tonight, it did the job, right? So that downward pointing shadow, if you didn't know me and you'd never heard of my ribbons, you would just think today was a very ordinary run-of-the-mill day. But it actually, the bottom of that shadow, just the buying kicked in at my ribbon. It's quite extraordinary, and let's hope that we get a follow through tomorrow. Again, white candles, lower shadows, to confirm that that demand from that long-term uptrend ribbon. The imaginary ribbon, I think we called it last week, is still there, and then we're probably okay. But we need to see now. We need to rebuild with white candles and high troughs. At the very least, where are we here? Is this enough to pull us off? We were full risk position. We had no reason not to be. We just literally, the candle before our last update, made a record high. Of course we were full risk position. I don't know. I can't answer that question. You can't stay at full risk position in the face of those technicals. Perhaps if you haven't moved by way of or a bunch of your stuff getting stopped out, or you being forced to take action on your trades, and then that is the most natural, as a trend follower, that's the most natural way of doing portfolio management. Forget index-based portfolio management models. Your trade by trade, your portfolio, the positional risk management is going to, there's going to be a black candle, there's going to be confirmation, there's going to be lower peaks, there's going to be breaking of troughs. You're going to be moving out of there anyway. If for some reason you hadn't done that, then I can't see a path to staying full risk position given that move. So no more than a third off the table. The bull market's still intact, but looking now for confirmation that we're going to head back up. Wonderful, it will hang in there, or confirmation that we're going to make a lower peak and supply is building, and there is something really wrong with this bull market, and then we'll take some precautions after that. So a fairly, I think, calm and organised and analytical approach to markets at this point in time, but bubbling underneath that calmness, of course, the little duckling on the very calm on the duckling on the swan, or whatever it is the analogy there. You're doing that portfolio stuff under the surface and keeping yourself as safe as you can. I want to have a quick look around the grounds. There it is. Look, I hadn't looked at that chart over the weekend. I had better stuff to do with my weekend than look at bloody charts, but I'm looking at it now, and it doesn't surprise me. And it probably, if you hadn't looked at it either, doesn't surprise any of you, because you know how important this one is, and it bears the brunt of it. And it hasn't been looking good. It hasn't been telling us to be full risk position. And maybe there's a good case, a good argument for us switching from the Nasdaq composite to the Russell 2000 for our risk management model, because we probably wouldn't have that much in, to be fair. We might have been a third in or a half in, or 2/3 at the very, very most. And last Friday's candle is like, you cannot get any more bearish than that candle, and there is absolutely no fight from that dynamic demand zone, which in the past has been so perfect at telling you where that dynamic demand should be, and yet look what happened on Friday. Is that the red flag we often talk about, the canary in the mine shaft, to push us off higher risk management settings in the other charts? And I think it is. I mean, that's disturbing, isn't it? Or isn't it not? Let's head over to Europe. Barely a blip there. So it's something more US-centric. It could be Trump-related, probably Trump-related. Looking at these charts, a little bit of a pullback in the DAX, but nothing, no deal breakers there, nor on the FTSE. And they've had a similar move in, compared to ours in terms of days down and down days, but not in terms of distance down. Spain is still fine, so no red flags there. Hang Seng, that's a great rally. That's a really strong move in the Hang Seng. Nikkei's bumping around, no big deal. That one has turned the corner. It turned a while ago. We've been noting it, but not a red flag. And we're seeing some improvement in those Chinese indices as they've come back from Lunar New Year holidays. No red flags. We've talked about Australia. Let's have a quick look at the various indices. Consumer discretionary sector, a little bit of a pullback there. Wesfarmers pulled back on a day. I think JB Hi-Fi got hit on a day, bringing that one back, but otherwise still, I'd say, intact. Today's candle is encouraging. Energy is just a cactus. There's no redeeming features there in that energy chart. None of you have any long positions there. You might have short positions, but you don't have any long positions. You might have had long positions in financials, and I think you've probably taken some risk off the table there because there are some big moves in those underlying trends, which is frustrating because they were looking good, but that's what earnings will do. Each one of those banks had some sort of update, whether it's a December half-year update or a December quarter update. And when news comes out of left field markets, sometimes are forced to change their valuation metrics, and therefore prices will change as well. We're still looking fine on gold, a little bit, double top, a little bit of supply coming in, but nothing too sinister yet. Healthcare is more trending towards the downside than the upside. Information technology, that candle today is the WiseTech candle, with that company having some major issues there at a boardroom level. And look, I mean, I'm not a shareholder, but geez, I'd be frustrated if I was, and I'd be pretty upset with a certain individual who maybe is putting themselves before the betterment of shareholders and the company. But that is all perhaps, but his lawyers aren't listening to me anyway. The materials sector index halfway, no big deal, but also not as bad as energy. Properties looking a bit dodgy. Staples, oh well, there you go. Hey, there's somewhere to invest right there. Staples, who would have thunk it? And telecommunications also looks very strong. Utilities, a big candle there, but still roughly stuck in the middle. Let us switch gears now and head over to the London Metals Exchange, and we're going to go to a line chart. Last week we were tracking a bit of a breakout in aluminium. It appears to have continued modestly to the upside. Copper has had a bit of a wild week, hasn't it? And a little bit less than halfway back since then. Still a fledgling short-term uptrend, but somewhat more neutral. Let us go to nickel, which continues to bump around the bottom. So does lead. Tin continues to improve. We'll get, no doubt somebody will ask me about Metals X later on this evening, which is primarily a tin producer. So we'll probably look at that, but that still looks very good for you lot who are holding it. And zinc is again also stuck in the middle. Talking about stuck in the middle, lithium carbonate continues to be stuck in the middle between about 74,060 and 81,510, but definitely a short-term downtrend bias there. This thing it's dead in the water. It is not going up anytime soon, and a slight downward bias certainly. Spodumene concentrate there, the Australian S&P Global Platts price. Somewhat of an uptrend, but flattening out. Let us head over to the Trading View screen now. I'm going to kick off with silver because I had a request today from Alan offline to talk about silver, and just wanted a general TA and wanted to know about a point of supply. I can't recall off the top of my head which one it was, but maybe the 35.15 to 35.47 point of supply, which looks very much intact. In terms of demand, we can see sort of around that 31.61, that last trough, and up to and including the short-term uptrend ribbon is where we want to see lower shadows, where we want to see white candles, and if we don't, if we get the opposite, if we get black candles, low closes into those zones, or certainly into the short-term uptrend ribbon, upward shadows, we're probably going to have another turn again. It's a very gradual, a very volatile short-term uptrend, long-term uptrend as well, and plenty of overlap in some of those peaks and troughs. Look, candles, if I had to pick, I would say are predominantly demand side, but only just, and that speaks to the indecision, the lack of consensus in this market. It hasn't been like gold. It's been a distant second, no pun intended, to gold. And more than a little bit ho-hum. So whilst there is a reasonable, let's face it, I can't deny there isn't a reasonable uptrend there. I wouldn't, as I've said to you many, many times at this part of this presentation, not expecting anything really amazing or fireworks for silver that some have predicted. I just can't see it in the technicals. I did get a question about palladium. That's platinum. It looks very sideways, so I won't spend any more time on it, but I did get a question about whether palladium is getting ready to have a big move. I think I answered that person by saying, well, I can't see it. It's not in the chart. If it was to trade above 1080, it might be interesting, and I reiterate that now. But if you were wondering, the other precious metals aren't exactly looking that crash hot, and it then also does highlight just how good gold is in that regard, and still looks good. I can't fault it. It maybe is losing a little bit of momentum, but ever so slightly. Up around these levels, it's in the shadow of 3,000. It's a big psychological supply point. There would be people who are long gold from 2,000 who want to sell it at 3,000, long from 1,500 that want to sell it at 3,000, long from 1,000 that want to sell it at 3,000. That's just natural. And it will take some time for the demand to work through that supply. What you need to do is answer this question: is there sufficient demand of the system to be able to consume that supply? And so far, it looks like there is very, very strong short-term and long-term uptrends. The price action compared to silver looks pretty clean, actually, if I was to draw sort of peaks and troughs in there. And I don't think we need to have any confusion about whether we've got a predominance of demand-side candles or supply-side candles. They are clearly demand-side in nature here. So, yep, there's a little bit of a pause, ironically, in that shadow, that 1% shadow, isn't it, of the round number. Maybe a few people using my rule there and selling a third of their holdings or whatever it is, a partial sell there at within 1% of the round number, just as a rule, because they know the psychology of round numbers. Possibly a little bit of supply is created and demand therefore needs to work through it. If I was holding gold bullion right now, I'd be happy to hold on to it. Let's go up the list to copper, and X marks the spot. I do these TA updates in ChartWatch and Evening Wrap regularly, and I point these levels out, and they just so often, don't they? Just somehow the price gets there. It can look as good as you like it. It was going gangbusters up until that point. I mean, just growing white candles, great momentum, and then it just hits that supply and it's just terminated. Arnold Schwarzenegger, 80s style, Terminator 1 style terminated. And we often say in these sessions that, we don't know an area is a zone of supply until we see the candles there. And if you see the upper shadow, if you see the black candle, that supply means business. And we've got to see the opposite now. We want to see it come back to this light green trend ribbon, throw in the white candles, the downward pointing shadows, hold that again. And, it's like if you had, if you had like a steamroller and you were driving it at a brick wall that's well fortified. That steamroller might have to hit the wall. It'll weaken it a little bit. It'll get rid of, some of the mortar, and some of the bricks will fall off. That's the supply coming off in this analogy, or the real life here. The steamroller will have to back up a little bit, much like this thing is pulling back, and then it'll have to have another go. And hopefully on that second go, it'll weaken it again. It might be the third go before it gets through that supply. All of that supply is consumed. The good thing about consuming supply, of course, we discussed this last week, is you actually create a lot of latent demand in the system, because that supply, which was obviously copper, is now cash and in the market, so to speak. Heading to uranium, there are no green shoots in uranium. It continues to be just the most well-defined short and long-term downtrend there. We did see natural gas starting to perk up. It did break out, to be fair, and is pulling back now. There's not a lot. In terms of the risk-on world, that has moved since our last update. Here we've taken a bit of a risk-off turn. So crude oil has turned down as well, and coal continues to ebb along the bottom. We will quickly finish off our discussion, our whip around the ground, with a look at the price of money, and that is our yields on our risk-free long-term bonds. Ironically, they have come off, actually. So if you look at Friday's move, which I'm guessing is that candle there, we saw stocks and bonds come down, which is never a good thing because it's generally growth related. So that would explain some of the weakness again in those commodities as well. So stocks coming down because of lower growth expectations. Lower growth expectations means lower earnings, lower profits, lower share prices, and yields coming down because we've got lower growth expectations. So therefore the assumption is that somewhere down the track central banks will cut rates, not raise rates, to stimulate growth. And yeah, that is not an ideal scenario when you see two big black candles, one on the bonds, one on the stocks. Generally that's what that means. Having a quick look at the Aussie ones, we're also seeing a similar move there Friday, and not much of a response today, waiting for some leads from the US overnight. Let us head now to your offline requests first. Thanks everybody for holding on. Let me just double check that there are no major technical issues over here where you are resting. Hello, Avant. And they're all requests and no complaints that I'm doing something wrong or I'm on the wrong screen. So, okay, let us do the offline requests first, and we're going to kick off with an Aussie stock here, and it is EVT from Colin. So EVT had some earnings today. Big white candle, undeniable demand side control candle there. Close near the high, so that control was sustained through the day. I would suggest to you more than just a little bit of short covering, probably also in the mix. Prior to that, so the only problem I have with this chart is the prior to that. Prior to that, it's completely overlapping. There's no clean price action anywhere, and the candles are a train wreck in terms of it's a zebra. There's like a sleeping zebra across the screen. Black, white, black, white, black, white. If I zoom out using the weekly chart, I can see that we will potentially have some supply kicking in around here. So from there to there, I just need to catch the 2 points, and then I can just draw that across. You can also do this on your trading view, but something like that. But that's okay because that's a bit of a ways to go. It's going to start around 15 and probably go towards about 1580. So let's pull that back to this chart here. Well, 15, that gives us a bit of room, doesn't it? Is it enough room? And that's really the only issue I have with this. To say it's a problem is too strong a word. It's a bit of an issue, and I think it's something you need to consider if you're entering around here. And you won't get your first close beneath sort of the last trough until you're all the way down here. Can you make 1-to-1 into that zone? And I think it's very, very close. Okay, I actually don't think you can, but I think it's very, very close. But having said that, it is about as big a demand side showing as you can get. Now, I'm really glad I talked to you about my optimised true range there. That is not hard to actually program, so I can probably put that into TradingView and share that with you. I did have a look into doing my RSC, and what TradingView is, I shouldn't say incapable, but to the best of my research and understanding, is incapable of doing, is referencing other securities and formulas, and that is the whole point of that formula. Obviously, I can do it in Amy Broker. I can reference the performance of one security, for example, the ASX 200 index, against the security on screen. I didn't look any more into it than about the first half hour that I spent on it. Let me put it on myself as homework to continue that search. I do want to get you that, but I think that's hard to do. It won't be hard for me to create a volume indicator, so I can almost share with you enough to get pretty much what you're seeing on screen. Leave it with me. Easy stuff I like to do, hard stuff I tend to not find as much time for, but I'll try. Okay, back to EVT. What I was saying is, of course, the way I set this up, it stands out like what's this huge red bar here telling me I've got the most hugely above average, many standard deviations from the mean volatility, and volume has done that as well. So I think there's something in it. You know how I feel about white candles. I wanted to talk you through my whole thought process here, because my whole thought process doesn't end up in chart watch scans the next day on market index. because I can't do my whole thought process for everybody there. I just do some charts I like and that's it. You guys, we hang out on Monday night and I've got a bit more time to explain stuff to you. So I did run it. Where am I going with this, Carl? Please tell me where you're going with this. I did run it in the shortlist, colon, and I actually ran it as a feature because really you kind of have to go with it and have some risk on the table, and that's all I'm talking about here. But if we were to go scratch down further than just the surface, those are some of the considerations I've been making when comparing this setup against the other setups or anything that you might find also, not just assuming mine are the universe of setups. Colin, I hope that satisfies your inquiry there. The second one you've got for me, which is RMS, is far easier to discuss because when I zoom out on this one, I can go to a monthly chart, I can go to any chart I like, I'm not going to find anything because I'm blue sky, so I've got nothing at all to worry about here. Now, it's actually a really great sort of juxtaposition between the two, EVT, where it was a zebra chart, really poor price action, but it had that one great signal, and a signal that was potentially coming up against a historical supply compared to this one where actually it's still very much a zebra. Don't get me wrong, for here zebra, but I know I'm using too many animal analogies. The leopard, dare I say, is changing its spots because we're getting some pretty clean candles through here and actually some pretty decent price action. But even before that, the price action isn't terrible in so much as it tends to move a bit, whereas EVT was really, really choppy. So better price action, better candles, no overhead resistance, and really great trends, and they're well established. So Colin, you've given me two, and I know you may be happy to do both, and that's cool. But if you had to pick between the two that you've given me, then I think the choice is obvious, is it not? So I like this one. I did also, I don't know if you saw in that little look there, I did also run it not only as a general plus 1/3, that's the watch list. Anything in the watch list is plus 1/3, but I ran it as a feature as well because I can't deny, nobody can deny how much the demand side is in control of this one. So happy. I don't know what's going to happen next, of course. I always put that disclaimer around everything because we saw in the introduction anything can happen, but all we can go on is what we can see now, which appears to be demand side control. Why is the demand side piling in? Because they think it's a good stock. Hey, who are we to argue? Why doesn't the supply side want to sell? Because they're not selling. They've been really reluctant to let go of their stock. Well, that's a good thing as well, isn't it? It tells you what the supply side thinks of it. They both sides of the market think it's a good stock. Let us go to Mick, who's asking about FND. And this one, I think, is, we looked at it last week, and we liked this candle here, if I'm not mistaken, because that was the 17th, that's the 18th, that's the 19th. I'll go back 5, so I'll go back here, 1, 2, 3, 4, 5. Did we have that candle? I can't recall. I think we did have that candle, didn't we? Because on the ASX, we have a Monday candle, yes. So we did have that candle, and we said plus 1/3, even though that says minus 1/3, even though this says minus 1/3, I can assure you it was a plus 1/3. Go back and check the tape. I must have copied and pasted from somewhere else or just typed it in wrong, but there's no way we could have been looking at that for a short. But plus 1/3 there, and if you were so inclined, plus 1/3 here, so just tracking the progress of this, and actually that's a pretty good candle. I could go plus 1/3 on that. So I think we're invested. I think we've got a full position on this one now, full risk position. So let's write that down, FRP. And I can't see any reason not to be FRP, and also can't see any reason to add any more based upon today's candle, which started to look really good and unfortunately found a bunch of supply on about average volume, on about average volatility. So not going to read too much into it at this stage. Obviously, we don't want to see confirmation of that, but I think we're okay with trends continuing to turn. Nothing goes up in a straight line. It was an intraday pullback. Let's see if it turns out it did anything more. But in the meantime, happy to run an FRP on that one for you. Mick asking, as a turnaround play, we did establish last week. It was the perfect turnaround play. We like, we like the fact that the trend was changing and held the long-term uptrend. It was moving back to high peaks and troughs, and this big demand side candle, shallow pullback, and things like that. So yes, that's a turnaround play. CAT, and Mick is wondering a minus 1/3 on this one. And let's look at some of our other scratchings from the past. And we can see here, I reckon that I wrote something like, if you see that candle, okay, if you see that candle that closes beneath this point of demand, that shadow I'm guessing, then we would be looking to take some off the table. We talked about FRP there. So we haven't seen that yet until today. I think actually today is certainly just on the basis of what we said in the past. I don't think we need to give it that much room. So I reckon that's close beneath. There's a bit of a lower shadow, but no, I still think we want to just take a precautionary measure here because of not just that, but because of sort of that. And it just looks like it's losing a bit of momentum, and it is also closing beneath the short-term uptrend ribbon. So close beneath that point of demand, actually also that point of demand. Some confirmation of supply, upper shadow, that black candle. Tried to hold here, beneath it here. I just think there's every reason to be out a third. So that's no question. That's not a question for me. The only question I have on this is, are we doing more than a third? And I think not, just with today's lower shadow. But let us then set another level for this, okay? And let us say if we close beneath here, then I think we're doing certainly another third. But the question will be, well, are we doing 2/3? And let me just say at least minus a third on a close beneath there, at least, if you get my drift. So hopefully that answers your question on that one, Mick. For me, yes, minus 1/3 on that one, and yes on this one also, and probably on that candle. I mean, closing beneath the short-term uptrend ribbon, there is, I want to say, a little trough in here. There's also, I reckon, a little trough in there. Last time we looked at it was here, so if it was here or here, whichever one, undoubtedly full risk position, no doubt about it. So that is a rock solid there. But since then, and this is the thing, don't wait until a Monday. You should be doing this analysis. There is actually a little uptrend here. Not on that bar. That's an insubordinate bar. Yes, that is a subordinate bar, but it may well be insubordinate. I don't know. But it's subordinate because its whole range sits within the range of the bar on each side. So I ignore those completely. They don't exist. Pretend they're not there. So this bar then is an inside bar to this one, and then we get a continuation of the downtrend. But then we get a little uptrend here, high, 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 low, and then we just take the highest point. We take the lowest point between that peak and that peak, must be the trough, because you've got a mountain, in between you must have a valley. And as we start heading back down, we have to say, well, we need the highest point since that valley, which is therefore that one, I'm guessing. So they're hard and fast rules, which I love about this sort of price action model of how and where to draw them. So you should be able to draw the exact same lines as I will draw, if you're using the same rule. So 165, I'm just double checking that's high, that's 164.5% in it, but it is certainly the case. And then we come down here. Okay, so it's important for trade management. It's important for trade entry as well. We like to see nice clean price action every Monday. You see me drawing these zigzags on the screen. But it's important for our trade management that we understand how to draw these peaks and troughs so that we can see where we are failing, okay, where we are failing to hold onto points of demand. So that actually is it's a failure there to hold this point of demand, and it's a really strong black candle close. We've got lower peaks. Now definitely we'll have lower troughs. We won't know where that next trough is at this candle point here, but we know wherever it forms, it has to be lower than that one. And we've closed decisively beneath that candle. For me, and you do whatever you want to do, but I'm just saying, well, weight of evidence here suggests that the demand that has been pushing this up is not as strong as it used to be. Hey, it's not wholesale get out, it's the end of the world. It's still a great trend, but potentially we're moving more into an equilibrium phase. And you have to ask yourself, well, do I want to be full risk position during an equilibrium phase? What would you rather do? I don't think you need to be out during an equilibrium phase, because often in great long-term uptrends, things pause for a while. But why stay fully invested? Why stay full risk position through here when maybe your better bet is to just be, max 1/3, and therefore we've got, 2/3 somewhere else working for us. Okay, so this is the concept of my exit, I guess, regime. Is, if this will zoom in for me, there we go, is that when we see these signs that the demand side is not as strong, we start to say, well, really, let's as a precautionary measure, knock 1/3 off the table and see how we go. And we can also see that we then went through that phase again through here, okay? And with that candle close, this candle close, we've got now a minus 1/3. And, if you wanted to hold on to that final third until some sort of interaction down there. For me, I don't. That's just, for me, I feel that's too far away. I'm a bit more active and proactive. So I think I'd like to be out well before that. But some people just like that idea of just keeping a little bit of skin in the game, and that's okay too. Sometimes it's easy to get back in if you've just kept that little bit of skin in the game, especially after it started to rally. Okay, or if it keeps rallying, if you get out 1/3, and boom, it starts to head back up. The fact you've got that 1/3 in makes you feel not so bad about it. You're more likely to then do the right thing and then continue to trade to the long side. Whereas if you got out of everything and it starts to rally, there's more fear, there's more trepidation. Oh, what if I get back in at the top? Okay, but if you've got skin in the game, you're cheering that thing up. So decide where you sit, what sits well with you. What sits well with you, you're going to feel better about it. You're going to trade it better. Okay, if it doesn't sit well with you and you try to do it, you're never going to follow the rules, and then you're going to feel crappy about the fact you didn't follow the rules, and that's going to make things worse. But I think we can all agree that candle is a minus 1/3, and then what you do after these candles, for me, it's starting to get a bit dicey. See this lower shadow here? Like, I look at that and I say, well, there was a bit of demand. Like, it's going the wrong direction. It's sliding, and there's a bit of demand here. And then, for me, I can't really justify being in it. I'm trying to just get that close to that candle, past that. Okay, so for me, I think I'm out. Mixed question is, look, is it a minus 1/3? You really should have been doing this stuff already. Don't wait for me to tell you on a Monday night. But I have to disclaim everything by saying you do what you want to do. I'm going to do what I'm going to do. I'm just showing you what I do. Droneshield has come from James. Is it a turnaround play? No, James, it's not a turnaround play because it doesn't meet any of the criteria. Should I go on? I don't think I need to go on because it doesn't meet any of the criteria. We don't have an amber. Here I am going on. But you keep asking me about these. Is this a turnaround play? No, I mean, this is potentially an aggressive setup. Is there a base? That's something else. Not a terrible base. Is there some volume capitulation, some above average volatility? A little bit, but not that exciting. Can we get in before we hit the resistance of the potential resistance supply of the long-term downtrend? No, we can't. So it's not an aggressive setup. And if that upsets you, then go make up your own setup. Okay, call it whatever you want, and then do whatever you want. But no, it's not an aggressive setup for me. It's certainly not a turnaround setup, but that is what it could most closely be next. When this turns amber, when this turns green, ideally we've got some nice price action. What we do have are 3 really great white candles on above average volume and above average volatility. So we've got a start of something, but it's not a turnaround setup yet. And it's okay, fair enough. It's not like I've written these rules down for you. We just talk about them on Monday. So I get that people might either be confused or just, not confused, just completely different idea of what these definitions are. Alan is asking about a turnaround setup on ALC. Let's see if he's close. He's more than close. In fact, if anything, he's wrong in that it's not really a turnaround setup anymore because it's gone, but it was a turnaround setup most recently. We have talked about this recently. I don't know, probably around about here or here. We said FRP. It's popped and it's dropped, unfortunately, and it's kind of done it into a big round number, which is somewhat not surprising. Look, it's not our first rodeo at 10 cents, so probably not the whole reason for that pop and drop. But there is some supply here from the past, and that is more likely to be the mitigating factor. So if we look at sort of that area there and extend it across, we've got pretty close to it. You could make that a bit wider if you want to. I won't, but you can see it is a zone. It is a zone of supply, maybe there. But I'm form fitting now, aren't I? And I don't want to curve fitting. I don't want to curve fit. But between that peak and that peak, certainly, this push here is getting close to a point of supply. A little bit of upper shadow there, potentially suggesting that was the case. Today's candle is not great. A bit of a disappointing move on a low enough volume to suggest that the demand side just wasn't there. I mean, they just did not want to get in the way of that, did they? And I don't know whether there was news or not, but I think today's candle is enough for me to take some money off the table on this one. 1/3 or 2/3, I'll leave that up to you. I know it has to be at least a third because of the size of that reversal. If you blend this candle together, okay, so if you take one candle that has a common, think about it for a second, so we have a common opening, so it opens, in fact, we can kill two birds with one stone here. The open and the close are the same price, right? So we end up with a candle that looks like this. So it'll have a line, and then it will have a horizontal line, and then it will have a vertical line that goes from that low there, so from about there all the way up to here. Okay, so if we blend this candle together, all right, we get that candle there, and it is a very clear, therefore, supply side candle. So on the face of it, it looks like one white one, one black one, but in actual fact, blended, it is that one. And it's massive, and it's, the top of it's pointing to a big supply zone. So for me, I can't not, I think, do at least a third, and it's a pretty big candle, whether you wanted to go 2/3, and just keep a third. It might just be a very shallow pullback, and then you can add some risk again to it. But if it does crap out, because it's a small company, they can do this. At least you got some off the table there. Okay, at least a third for me. Let's go. Alan actually wanted silver. I've done silver for you, Alan. They are all the offline requests for Australia. Let's head over to you, very patient people, for your online requests. Kicking off with Avant, who's got Bio, which was looking very good, and perhaps has been caught up somewhat in the crappy market, crappy broader market. And look, that candle is about as decisive as you can get. Great volatility, great volume, push, supply removal, participation, interest, commitment, all of these wonderful things that help get that trend rolling. Put a bunch of supply into latent demand, giving them their cash back. And look, it's been a pretty mild pullback since then. It's not a white black like we saw. It's white, black, low shadow, black, low shadow, lower shadow, no body, trying to hold on to the dynamic demand of that short-term uptrend, which tends to be working up to this point. So look, I'm okay with it. I don't think we need to panic just yet, like we're probably taking precautionary measures on some of the other ones tonight, but we still need to, you still need to have a path out. You can't just go into these things saying, well, I'm going to hold these until they go up. That's not how we do things. Certainly there's a point of demand there. I would also look at it if it was to close beneath there, but see what candle it is doing. And then, maybe your final exit is there. If you're down there, it hasn't worked out, take your licking, take your losses, and move on and go find something that is going to go from $65 to $2, okay? It's that simple. You're going to take lots of little losses, and you're going to have hopefully lots of big wins, but you only need a few big wins to pay for those losses, and then everything's cream on top of that. So look, I think we're okay for now. Just to reiterate, I'm going to write FRP. That's my alarm going off there to remind me of what time it is. Otherwise, I lose track, and I'm still talking into the into the wee hours of New Zealand time. FRP for now. Cat, we've done also Avant previously. Let's go to Amber's got ABB. Oh, well, that's an interesting candle today. It is one that has come up a few times, so we've been sort of moving back into it through this phase here. interesting candle today. A great deal of indecision, huge range. Look at that range bar, significant volume as well. Really, the market couldn't decide, could they, Amber? So we had that downward pointing shadow, we had an upward pointing shadow. I'd say the supply side was probably in control. By the end of it, I can only say probably because it didn't close near the low, but we did have a black body, so we came down from the open. But at the end of the day, we still closed up on the previous session, so we did actually make some progress, close to close, but that's a progress. So, net, probably pretty close to zero on that one. So let's defer to the broader trend is still fine. We're still making, I was going to say we're still making higher peaks and higher troughs, but we're actually not. There's actually a little zigzag down there. But we are holding the short-term uptrend ribbon, and there is a long-term uptrend ribbon. So I think we're okay, but again, what's our path out of it? Where do we really not want to see it go? And I don't think we can tolerate it going down here. And I would say, given this shadow here and the indecision in this candle, I think, look, I hate to do minus 2/3. I know it sounds a bit flippant, but let's go at least 1/3 there. Because, you need to be comfortable with the way that you're applying the system. Some people like to hold on a bit longer until they're really convinced that it's not going in the right direction. But I would say at least a minus 1/3 on a close beneath that level. But for now, equally, also waiting for confirmation. We might get some demand side confirmation tomorrow, hopefully, and then we're okay. SEK, I think, looks much better. It definitely made the broader shortlist today. So if it's on that shortlist, you'll see it tomorrow morning in ChartWatch. It's plus 1/3 for me. It didn't quite make the feature list, but it was so very close. And this is out of all the ones that were in the shortlist that didn't make the feature list, this is the one I spent the most amount of time contemplating whether I should put it in as a feature. And it just didn't make it, just on the basis that there's this supply area here. So probably even to this peak, if I sort of link those 2 points together, just change that to red and then draw that across. And I couldn't promote it more than just a regular shortlist stock. So I didn't get to feature. But I do love this candle. I think today's candle is great. I love this move here, gapping up above that shadow, and then very shallow pullback, really nothing days, and then that strong showing today on what wasn't really outside of the banks, wasn't a great market. So I think that's a nice volume push to get it going. Green here, that downward pointing shadow reaching into demand towards that short-term trend ribbon. So certainly this one is probably the easiest one tonight. I think just about FRP plus 1/3, yes. And just mindful of that. I mean, at least you're going into it eyes wide open, aren't you, Amber? If you've got a big black candle there, you're not going to be shocked. And you're going to know what to do with it. Okay, Ben's saying, hey Carl, what's your opinion on CHN, which is trying to move itself into a turnaround phase, isn't it? It did have a nice pump, but since then, as tends to be the case with this stock and many of the stocks in this area of future-facing metals and minerals, just can't seem to turn their fortunes around. I'm ad-libbing Ben's comment here. What would be a good entry and exit point? Any advice would be appreciated. I also know Sayona and SCXO are toast, but holding on resistance. I might look at that. Would it be wise to enter now? I think that is supposed to say. And do you see CXO and Sayona even getting back to their highs? Okay. I think Ben might be new here, but let us do this thoroughly. Okay, so Ben, I need uptrends. I need confirmation. I need sign from the market because I don't know anything. Okay, I don't know anything about these stocks. I don't know where they're digging or drilling or what stage they're at or how much money they've got in the bank, what their cash burn is, or whether they've got good management or management that just wants to burn all the shareholders' money and just have a great time and then move on to things. So I don't know those things. Number one, because I don't care about these things. I couldn't care any less about them if I tried. Number two, it's hard. It's hard to do that research, and I don't have time. I'm busy, and I couldn't care less about them, and I couldn't be bothered doing them. And am I thinking of any other reasons why I don't know these things? Well, I'm a technical analyst, and I only care about demand and supply. And I believe that if the market has done that research, all that research I couldn't be bothered doing, and they're all smarty pantsers and they think it's great, and they'll start buying it. They'll go, you know what, I can't afford to leave that money in the bank. I need to take that money in the bank. I need to buy these shares. I need to get a mortgage. I need to, get somebody to back me, and I need to get my money in. And that's going to create demand in the system. And at the same time, if this stock is as good as it's supposed to be, the people who own it, they won't want to sell it because they've done that research as well. That's why they own it, and they're not thinking they don't think it's worth $1.50. They think it's worth $150. And the demand that's coming in against the withholding of that supply must create an imbalance between demand and supply. Demand greater than supply, price must go up. Okay, and that is where I jump in, and I will ride on the coattails of all of those very clever people doing that analysis. And I can't see it here. So that's the big picture stuff. If you're new, do have new people coming on all the time. So I don't want to sound like an ogre. I can't do that because it's not an uptrend. Well, I can't do it because it's not an uptrend. But it could change. That's the thing. We still have a downtrend. Okay, it's still a long-term downtrend. I know this is amber. Okay, but we're trading beneath it because the price is beneath it. Even if that is amber, we're still long-term downtrend. If we start to trade above it, I might say something else, but we're not. Okay, this big ribbon here, Ben, I'm not sure if you know, tends to, not all the time, because they're not all the time, it didn't work as perfectly there as it often does, as an area of dynamic supply in a downtrend. So it's where the price tends to go and then tends to back off again. This is why, and it's for that reason, that we say that if the price can work its way back above that zone, then we start to think of it more as a potential buying opportunity. And if it was to start to work its way back above that zone, and if this ribbon is amber at very least, if it's green, that's better, but it can't be pink, if you get what I'm saying. It has to be amber, can be green, can't be pink, okay? And this one is green, so we've got a short-term uptrend. We can say the short-term demand-side market is in place, and we're working towards a long-term demand-side market. We do a little bit of a dink. We call that's a technical term, a dink. That is a push, a pullback, a hold, nice price action preferably, nice white candles preferably, and now we're in a turnaround play. It's somewhere around here that we'll be looking to buy. And as everybody else that's listening now and on the recording know, if you follow me, you know that this setup works. And you know that you can afford to be patient with it. You probably also know from personal experience that when you jump the gun, it tends to burn you, okay? You tend to get burnt when you jump the gun because you go, shit, I probably should have waited on that one. I can see now that wasn't a turnaround play yet, okay? There's just another rally in a short-term downtrend, and I got too excited. So it's okay to be patient. It's okay to let it play out. It's not there yet. I think that's all we need to say about CHN. As for good entry, good exit, I don't know until I see the signals that I need to see. Okay, so I won't know until I see them. So I can't tell you. Let's go to CXO. And again, there's absolutely no reason for me to even contemplate this for a buy, okay? And it may be the low. This is the thing. I could be completely wrong, and I'll never know until it gets to $1 and I say, geez, I probably should have bought it back there at 8 cents, okay? But all I can see here is a complete, lack of desire for people to own the stock, and still fairly reliable selling pressure, if you could believe it. Like, who is left to, tell me, who's left to sell this thing? But it's still there. That might tell you something. But once again, we need to see something like this, interaction. We need to see changing of trends. There's so much that needs to happen. So there's no point even spending any more time or bandwidth or brainwidth on it. Why waste your time on something that will take weeks and months for us to get involved? The good news is, though, if it is going to go back to $1, your question being, is it going to trade back to its highs around 190? I don't know, because I can't tell the future. That's the other problem that I have. It's a major impediment of mine. I can't tell the future. But I can guarantee, okay, whilst I can't tell the future, I can guarantee, and you all know me, and you all know that this is the truth, right? And give me a big thumbs down if I tell a lie. But ladies and gentlemen, if core lithium and or Sayona go back to their highs, we will be on board. 100% we would have traded them, and we would have traded them probably pretty early. I reckon Sayona from about 5 or 6 cents. I reckon core lithium from about 20 cents, okay? And if this thing goes back to $1.90, we'll be on it from 20. And if it does it in the right fashion, we'll be on it from 20 to $1.90. And if that's the case, who gives a shit? or any expletive you want to put in there that we didn't get in at 8 cents, if you get what I mean. Can you see my thinking on this one? You can't see my thinking, but do you get my thinking? Do you get why I couldn't care less whether this is the low? It is meaningless to me. It is a waste of my brain power. It's a waste of my energy. I can't stress enough that you must stop doing it if you want to remain sane and liquid, profitable in trading. Do not worry about it. We will get it. We will nail it, and we'll be on there, but we don't need to be on there now. Welcome to the party, Ben. Nigel, hi Carl, your thoughts on today's candle on GNP? Let's have a look. My thoughts on the candle is that I know it's a not very liquid company. So these things can happen. I'm guessing it had some earnings today. The first pass of the earnings, they looked at, I'm not sure about that. A sell order hit the market. And then they maybe had another look at it. They go, actually, it's pretty good. And the latent demand of the system came in and we got that big lower shadow. So I still think we're intact. It was a gentle trudge towards $3. I can't see anything else that would worry me about this one because everything, as we know from probably last week we talked about it, was checking out. So no, I don't think today is that species ending event that requires us to get out. I don't think it's even a minus 1/3 because we ended up closing back above the short-term uptrend driven, didn't we? And really everything I teach you in these sessions, it's just about points of no return, isn't it? I mean, some are points of no return in terms of taking a bit of risk off the table. Some are points of no return in terms of taking all our risk off the table, but they are clearly defined. We have these concepts that, that short-term, great news about the short-term trend river, and it's on your trading view screen. You didn't make it, I didn't make it, it's just there, and at least we know if we close beneath that, that's a point of no return. If we get beneath that trough, as I've defined it for you, that's a point of no return. And that's all we're dealing with here, okay? And isn't that wonderful that we're not dealing with, were those results good today? I mean, were they good results? Like, who gives a shit? I keep saying that word today, maybe when we always have themes every week, and this week's theme is the four-letter S word. But who cares? We only deal in points of no return as traders. Let's go to, I think that's explained to Nigel. Let's go to Matthew. G'day, Carl. I don't trade Aussie market, but congrats on the long-term trend ribbon on the ASX today. Oh, yeah, well, yes, don't congratulate me. I didn't make it turn around from there, so I can't take any credit. Remember, it's an imaginary zone. But it always feels good when it does respect it. Your numbers translated to PineScript are friggin' elite. I don't know what that means. And my numbers translated to PineScript are friggin' elite. My numbers. Maybe explain what that means. I will try and get those formulas for you though. Let's go to Guy, who's got one in the US. Actually, we won't go to him. We'll come back to him. Don't put any new ones in because we're about to hit 8 o'clock. Okay, so Matthew coincidentally is going to finish us off tonight with his Kingsoft Cloud. Guy will do yours shortly. Robert has plus 1/3 on these. Nice, let's have a look. We've got some setups here. PDI, look, potentially, look, yesterday's candle, I'm pretty sure I ran it yesterday because I do like that candle off the light green ribbon. Robert, as you probably liked as well. Today, I did see it and I thought, I know it's only a little blip, isn't it? It's probably 0.5%, but I would have preferred it to close on the high. So it didn't make the list for me today, which means I wouldn't go plus 1/3 on it, but certainly FRP, no reason to do anything but to continue to hold here. And next high close, next high close would be that plus 1/3 because everything else is just wonderfully in trend here. So we can see there's demand side control. Okay, we can see that money wants to be in and supply wants to be in as well. And when we have consensus, ladies and gentlemen, that should be the theme for today. Good trading, good trend following is all about finding the strongest consensus. Cash wants to be in, stock wants to be in. That's consensus. We want to be in. Okay, let's go to CLE, which is, yes, it was candidate. Oh, let's try somewhere else. Don't worry, it'll appear very soon. CLE, there we go. I didn't put it in tonight just because it had, again, just being pedantic. I don't think I put it in. Maybe I did. Because it's like, it probably should go in plus 1/3 because you can't really fault that candle. I mean, it's just going vertical, a bad day in the market. It's still up there. It's invincible. Like, we get taught that when things go up, they need to come down. That's just not true. This thing is just hanging up there, which means cash wants to be in, stock wants to be in. So I don't mind whether I did run it today in the shortlist. It didn't go feature, I know that, or not. FRP plus 1/3, I don't mind. So I agree with you on certainly that one, but maybe just holding back a bit on PDI, Robert. And we're going to go to your final one, which DXB did make my list today. Didn't quite make the feature just because it's still sort of coiling. Am I saying that right? Coiling. Sounds funny because I've got my feedback coming through here. Coiling, like a spring through here, and then I just sort of saw that. I thought, oh look, is it a feature? Look, it's probably not a feature, but certainly deserves to be. Let's move that, put that there. It's, yes, plus 1/3 for me. So 2 out of 3 yeses, and even the one that, look, I wasn't quite there on. We weren't far away on that one, were we? Thank you for those 3, Robert. Let's go to Ian, PAR, which is still looking good. I know today's candle wasn't great, but there were a lot of stocks that didn't have great candles today. Last time we looked at it was FRP plus 1/3. Certainly we are going to be FRP, but we won't be plus 1/3 because of that candle today. Is there anything sort of sinister from the past that might explain today's price action? Not really. I mean, that's going to come into play at some stage, but it's a little bit of a ways away. I wouldn't read too much into it today. And as you've seen many times in these trends, you get black candles. They're inevitable, but they tend to get replaced with white candles and downward pointing shadows before too long. If they're not, then we've got something that we need to do. Let's go to sand. It's got ALL, which is still in trend. Sand, certainly a bit of a sharp pullback through here. I'm pretty sure it was earnings related, but considering how bad some stocks have performed after earnings, I think that's actually come off or come out of it pretty well. So I'm okay, but look, I'm okay with it. I'm happy to go FRP. Obviously not going to add risk on the last candle because it didn't close at the high. If it did, I might consider it. But I probably also wouldn't consider it just on the basis that there's a big supply push here that would just keep me back until I saw a little confirmation. So when I see a big supply push like that in a wonderful uptrend, rather than sort of jumping back in on the first candle, I tend to just wait for a little bit of a confirmation in a higher trough, just to know that we're heading back in the right direction with our price action. But certainly FRP here for me. And the other thing we have is really handy actually, because if we're getting beneath there, that's when we're going to start to take some action. So let's go close below would be a minus 1/3 through there. Let's go to Sand's second one, BHP, which is I know Rio. Let's say no on BHP because it's not a turnaround setup and it's not an aggressive setup and it's certainly not alongside continuation setups. There's nothing to talk about. Yes, I would almost argue a predominance of white candles, interesting price action, going sideways more than anything else. But I don't need to discuss that because it's not part of my setup. What's more interesting for me is Rio, because I think Rio is looking better than BHP, and that was kind of got a fledgling short-term uptrend. There's a few white candles around, a few lower shadows, but not enough to get excited about. But maybe that's the one out of those two you might prefer to look at. NEU again, I'm not sure if you're asking about shorts here, Sam, because they're not long, so I'm going to keep moving. I'm not trying to be harsh at all, but I have to stick to the rules, I think, for everybody else. Let's go to ASB for John, which is more of the kind of setup we want to find. Is this the EVT candle? I love big white candles. I love volume. I love volatility there. And it's worth comparing. I know we started with EVT and probably a pretty similar setup here. But I think where ASB was better than EVT, and we've got a bit of hindsight, obviously, is that, we did have cleaner price action. We had, it was less of a zebra. So just trying to highlight that, yes, big white candles, yes, big volume, yes, volatility, but we still want some of the other stuff to go in the right direction for us. This is all very good. I can't complain. Today's candle's very strong. I can't see any reason at all to not be holding a full risk position here. I'm not going to add. Today's candle doesn't warrant it. Bit of an upper shadow there. Not bad at all. I think you can go next high close. Next high close plus 1/3. That would interest me, but FRP for now. Let's go to Sam. We will do your Bitcoin later on when we head back to TradingView. Caterpillar for Jenny, which we have done. I have some concerns and reservations about that one. TRY. Try near. I don't have a TRY. If it might be US one. Not sure what you're talking about there, Jenny. Feel free to clarify for me. Sue is saying, can I have your thoughts on Telix? Sure can. Looks wonderful, a bit like that last one we looked at there, ASB, the stairways to heaven. FRP, last time we looked at it. Look, I reckon you would have taken some risk off the table here, to the point where you probably missed out on that if you were really aggressive to the downside. It does demonstrate why. It does demonstrate that the benefit of that sort of plus 1/3 ... if it's a really strong trend, like why not? But I do think that you would have probably minus the third around there because you're breaking through some points of demand through there, and probably the day before, like frustratingly, ironically, but that is how it works sometimes, not all the time, but sometimes the market does exactly enough just to have you out the wrong time. Okay, so full disclosure, I reckon my model would put you roughly in that position, minus a third. And really, if you're sort of the momentum trader, I would question here, at least caps lock, at least a third at that level. So probably out, but again, depending whether you want to do that. So you wouldn't have had it here. And then frustratingly, you'd be just tearing your hair out because this is now a big signal to get back in. Well, welcome to trading. Welcome to trend following. So yes, FRP. Today's candle up back into 30, big gap up. I can't see why not. FRP plus 1/3. Yeah, for me, I think that's very strong. And yes, it's sometimes on these trends you just want to keep some skin in the game. Let's go to the. I'm just trying to find my spot now. NWL. Are we taking a third off on this one? Us, Sue. We're not. We're potentially not far away. Good news is today's candle and yesterday's candle, lovely lower shadows. So there is demand working in the system here. I'm pretty sure there were some results on this one. So post results, no major disaster, and that's a good thing in this market. But again, we need a path out. I would say close below there. I'd be a third at least, but I'll leave it up to you. Okay, but at least starting to take some risk off the table at that stage. Brett's got I was going to say US, not ESR. I think still very much intact here. Didn't hit any round numbers or anything like that, so there were no reasons to get out prior to this. And even in all of this, there's nothing really obvious. So many times we've said, "Oh, well, that's great. We can peg our exit beneath that." Here, there hasn't really been anything. That's why that short-term trend ribbon is there. Is in the absence of some price action factors to help us, then we also have this. So I'd be pretty close, I think, to taking some off the table on this. It might be next low close less than the short-term trend ribbon. Then just at least a precautionary 1/3 on that one, just because it's taking too long, more than anything else. But if we take a third off the table, by definition, we still have 2/3 in the system, of course. Let's go to VTX for Brett. Mindful of time here, so I'm going to pick up the pace. Brett, ditto on so many of them. We do have a point of demand here that's sort of coinciding with the bottom of that trend ribbon as well. So I would say close below there is minus a third at least. I'll leave it to you to decide when you get there on the nature of the candle as to whether you go more than that. Let's go to Jackie, OCC. Why wouldn't you be minus 2/3 on the 20th of Feb? Because it is created short-term trend, it's traded below the short-term trend ribbon. We have actually got some scratchings here, fortunately. And ironically, it's looking very similar. Did we do this one? We did this one before. I've drawn on this tonight. Okay, so Jackie questioning something I've said before. Why wouldn't you be minus 2/3 on the 20th of Feb? Let's go to the 20th of Feb. Let's find that date. Let's go here. 17, 18, 19. Coincidentally, I was on 20. Okay, why wouldn't you be minus 2/3 on the 20th of Feb? Because it is closed below the short-term ribbon as well. Yes, we are. That's exactly what I said. So you would be at least minus 2/3 on the 20th of Feb. On the 20th of Feb, yes, that's where I've drawn maybe there's some confusion over where that 1/3 or who that 1/3 is attached to. That 1/3 is attached to that candle. It's just that if I put them in the wrong place, they're hard to see. So sometimes I kind of just put them over here so we can see there's a third. Because if I put them too close, it covers the number. But that is not attached to that one. That is attached to, you can see my trouble, my difficulty. That's attached to that one. That one's attached to that one. Okay, so yes, that is at least minus 2/3 on that day. And then the final one, I'm going to try and see. How's that? Okay, hopefully that makes sense now, Jackie. Peter asking about DUR, which is, the good news is nothing terrible going on there just yet, but we are seeing a bit of supply coming in, a bit of indecision through, I'm guessing earnings. Again, many of these have thankfully navigated the earnings season pretty well, but we will need to do something. Yeah, close beneath here, I'd be concerned. You might want to give it as far as the trend ribbon. Okay, so it'll depend on the candles. Sort of monitor the candles. If they're really nasty, you might want to go a bit earlier. If they're sort of just drifting, maybe be a bit more conservative. Okay, but certainly I don't think we can go any further than that. So if we have we talked about points of no return, close beneath there, minus 1/3. Okay. That's, as I draw it there, it's feeling a bit far away from me, but that's just the way my brain sees it. ALK I still think looks good. We have, I have been running it as a turnaround play. I reckon since there, we talk about patience. We talk about not getting sucked in, like, how did it look there? Probably very close to that point of supply maybe. But it is why you have to be so cautious around these turnaround setups. How about there? I mean, it's looking good. No real dink though. Maybe that one was. But it's, sometimes they take some time. Sometimes they take several efforts to get going. And I don't think in fact, I'm quite certain I haven't run it until now. I'm quite certain this last batch here through here is the first time I've run ALK. So there's just enough in it this time, so we can see this sort of consolidation through here is what I guess I felt it didn't have previously enough of, and that's why I chose this time to put it in compared to not putting in previous times. If you just sort of look at the general slant here, it's still very much down, whereas now we can sort of say there's a bit of that going on. But to answer your question here, Peter, on Alkane as a turnaround, yes, I have been running it a few times, and it is actually going in tomorrow based on this candle here. I feel is enough. Above average volatility, decent volume, holding trend, reaching down, pushing back up, in line with a few of these other candles is enough for me to go FRP plus 1/3. It did not make the feature list, however, as you can see when I show you the feature list, which is sitting in here. Didn't quite make it, but still I think worth a look. Let's go to Matthew. He's got US stocks, and it's fundamentals, so I'm probably in trouble. It's got the Cobra pounce ready, the coil perhaps. Let's have a look at these US stocks now, heading back up the list using our trading view screen. And we're going to kick off with LX, which is Lexin FinTech Holdings. Okay, nice trend. Let's check on the weekly chart to see if there's sort of anything out that side that we need to be worried about. Not massive. I mean, they're fairly old, but we will just keep an eye on a couple of points of supply. Did I do that? Working through here and through here. Now I can hit escape, and we'll go back to the daily chart, and this will put it into perspective for you when we sort of pull down and see where they are. Okay. If we're going to set up a trade here, we'll use a green zone, a green rectangle now, or it'll turn green. So if we look at, say, this area, so if we're looking to have exits beneath that demand zone, and we'll just change the colour of that, which is this one here. Do we have at least 1-to-1? I won't sort of draw in boxes or things like that, but I think we could see we've got at least 1-to-1 into that zone, so we're okay. Everything else checks out. Short-term uptrend, long-term uptrend. Price action looks good. Good separation through sort of this push through here compared to this shallow pullback. Back to high peaks and high troughs. Certainly, a few dodgy little candles in there. Bit frustrating. I wonder if we'll see sort of cleaner candles later on tonight, but definitely predominance of demand side candles. So there's nothing in there telling me not to do it, certainly. It'll just come down to whether this is the best setup compared to everything else we're going to see. But looking at this one in isolation, and that's what we do here. We look at setups in isolation. We don't look at them holistically and say, well, these are the 4 best trades you can do today based upon everything. That's your job. My job is to look at them in isolation, because that's how you ask me these questions. Now, Lex, what am I doing? Let's go FRP. Oh, gosh, that's all happening. Double click. Yep. I do struggle when I get over here. FRP plus 1/3. Click OK. Click Save. And let's move on to the next one, which is KC. It could be coffee, but I don't think it's coffee. I think it's Kingsoft Cloud Futures. I know coffee's been doing pretty well. This one, again, another very strong trend. I'm just a little bit concerned about the last couple of candles there. Let us have a look at the weekly chart, see if there's any reason why these candles might be looking the way they are. We do have a bit of a zone, so we've got a zone through here. So old previous demand tends to act as future supply, so that is an old demand zone. Let us change the colour of that to have it represent for us supply, and then move back to the daily chart, and we'll see potentially, so you can see that even $20 wasn't a real issue, but it just feels like maybe it's starting to get close to that old area. So the reason why it can act as supply is that a lot of people got in there, and then the price tanked from there. It broke through that area of demand, and a lot of people got stuck. And all this time, they're stuck in at that level, and they wanted to get out. Now, that's theory. We won't know until we get there, and we see the candles there, and it tells us, okay, actually there are a bunch of people acting in that fashion, and demand is being overwhelmed there. Look, we're not there yet. Maybe we're seeing some black candles there that are signaling that. I don't know. I don't know. It's a plausible theory. But it's enough for me to say, well, I'm just going to hold off. And even then, if I got the next high close, the question would become, well, could I be bothered? Could I be bothered trying to fight the battle up there in that 24 sort of resistance zone? But everything else checks out. Everything's very strong. Again, it's not a matter of, well, is this a good one in isolation? I think it's a very strong one. How does this, if we take this through to the next round, how does it compare to the ones that are in that round, and then the next round and the next round and the next round? Can we just look at NVDA? Yeah, I can look at that as well. Reports Wednesday night, seems to carry the Nasdaq every quarter, and hopefully it does. Hopefully it does carry the Nasdaq. I know we got a bit bearish on it a little while ago, and then it turned back up again. I just think it's in a trading range, isn't it, Matthew? It just seems to be looking more like equilibrium every day, and equilibrium is where we don't have consensus. We've got indecision. We've got people that disagree. People banging the desk saying, I think Nasdaq is the best stock in the planet. And then people banging the desk saying, I think it's overvalued. And that's how demand and supply equate, hence equilibrium, hence prices go sideways. And until one side potentially exhausts itself, so potentially the supply side has no more stock to sell, they've been consumed by the demand side. And if there is a sufficient demand to keep going and motivated demand to push price up, then we'll keep going up. All right, that equilibrium phase will give way to a demand side phase. However, if demand is consumed, if all that cash looking to buy NVIDIA is consumed by the supply side, and or supply increases because whatever, some fundamental reason, some news event, earnings, and demand is then consumed, then that equilibrium phase will break and we'll go into a supply side phase. But it is equilibrium now. So, and this is, I guess, the whole point of the model is to not mess with Mr. In Between, okay? And I think a lot of technical analysts make the mistake, and I did this many, many years ago. I'm talking over 20, maybe bordering on 30 years ago. I started out in the early 90s. is having a set of stocks that you look at every day. Do you do that? Have you ever done that? So like a set of stocks that you like, you know, might be the top 50 or whatever, the top 10, and you go through that list every day. And it's such a waste of time because so many of them are probably going to be in equilibrium, and it's just like you're not going to consider those, so why are you looking at them? And that's where, you know, the technology sort of caught up to what I was doing, and you know, programmable software scanning became a possibility, so you didn't have to do those. You cut it down to a short list and just see demand side markets in the charts. It's got the Cobra Pounce. I'm not sure which one that refers to, but hopefully I've answered your US based stock questions there. I'm going to quickly head offline to James. I don't want to forget him, and then I'm going to do Bitcoin before, so I don't forget that. Actually, we don't want to go here. This is Coca-Cola in BMV. Where's that? Brazil, probably. What is that flag? I should know. Somebody will tell me. What is that flag there? Mexico. Is it Mexico? BMV. The B's got me. It can't be Bolivia. What is it? Somebody tell me. Where is Coca-Cola trading there? This is the US listing, and it looks very, very good. I like it a lot. It is, however, beginning to interact with. I'm going to go. I'm going to hit that one, and then I'm going to drag this one up to here. Let's try me a second one. That's okay. It is in the supply zone. And what's wonderful about this is it helps me make the point that we don't know it's supply until we get there. We print candles there. And actually, I don't think there's that much supply. There's a little bit of an upper shadow. Tonight, I think, will be the key candle that will really define where the supply's in that zone. And if we see another high close tonight, then I think this is looking really good. I think a lot of people probably would have been hoping, you know, a lot of shorts in the system hoping, pegging their belief system on that being the top. And if it's not, then they're going to be put to the sword because it looks like there's plenty of demand in the system. I love the gap. I love the shadow on that gap. I love that candle. I love all these white candles. There's very little I don't love about this one. I reckon it's worth some skin in the game. I'm going to go plus 1/3 on this one for you, James. Certainly FRP if you've got it. I'm not too worried about that supply because I don't think the market's worried about it. Let's go up the list again to, I don't think we had many US ones, everybody, so we're probably not that far away. Bitcoin, certainly we do want to do some Bitcoin. Let's get rid of that. BTC USD, and we'll take the Binance one. Very flat. We talked about equilibrium, so that was a great preface to this chart. I don't think I need to say much more. Just as much activity in the market is saying to Bitcoin's great as there is saying I'm not so sure about Bitcoin. And until we get one side having an ascendancy, I don't think we need to do a whole lot. If you're asking me where is Bitcoin going to be in a week or 2 weeks or 6 weeks, I don't know. I can't tell the future. It'll be where it's going to be, but we will see. Rest assured, if it starts to print white candles, if it starts to have that nice price action, if the short-term trend, we get above the short-term trend and that turns up, that's when we're going to start to look at it. Until then, I think we can just cool our heels. Sand's also got a few US stocks here. Barber, which I'm pretty sure we looked at last week, was going very well, continues to go well. I wouldn't have told you to do anything last week, but FRP, maybe even plus 1/3. Today, just with this shadow here and this shadow here, and we sort of in the shadow also of 150, a little bit of a round number, not a deal breaker, but probably enough just, and don't make no mistake, the next words out of my mouth aren't going to be take anything off the table, but it's enough to continue to be FRP. That's probably the real supply zone there, not 150. But if we head back here onto the daily chart, I don't think we're adding risk is my point, but we are certainly not taking risk off the table, and that's my opinion. You do what you have to do, but I am FRP here, but not adding any extra risk just yet. Next high close, yeah, I might consider it, but also considering it has run, we're a long way from protection, and we are approaching a big supply zone. So consider that if you're thinking about adding risk there. Let's go to MSTX. Which I don't think it's that one. Maybe MSTR. MSTR is more likely, or not. Spinning circle of death. MicroStrategy. Not sure why that wouldn't come up. I'm not sure which one you're talking about, but I can't find MSTX unless it's that one. Over the counter. I don't know. Sorry, you're going to have to fix that one up for me. Sam, we've done NVIDIA. That's wonderful. I don't need to talk about that again. Going to Guy, he's got MELI. Mercado Libre. Great gap. Look, not adding risk, just on this this black candle here. If you do need to consider the gap as well, paint the gap white, but it's going to create an upper shadow. So it's actually not a black body. It's a white body with an upper shadow to there. Okay. So not the perfect candle, I think, that I need to get me in, but certainly FRP. Yeah, it would not be letting go of a single share. That's just me, because everything else heading into that is just magic. I mean, it's just a wonderful. It's a little bit turnaround, a little bit continuation, isn't it? Because rather than being in a long-term downtrend, it's all it did was interact with the dynamic demand of the long-term trend-driven. So FRP, happy to continue to hold on to that one. And I just want to in VDA. In VDA, I just want to make sure that I didn't draw on that one, did I? So I don't need to save it. That's what I was worried about. Okay, heading back up the list to finish us off, and I think we are done. There are no further US, and I'm just going to head back down the list and make sure I didn't miss anyone tonight. Did I miss Tyro for you, Jenny? You had TRY, didn't you? And then you did correct it, and I didn't see that. So let me do your Tyro payments. We'll do it here. Too early. Okay. It can't be aggressive because it's already in the pink zone. And if it's in the pink zone, we know it could take time to get through. So why are we buying it? That's the key. People keep messing up the aggressive because if we want to get it before it gets to that red zone. Okay. If it's in the zone, then we have to wait for it to be a turnaround. So that's too early for that one. And yeah, I'm pretty sure I've done. That's Peter saying I missed his SXE. Sorry, Peter. Let me do that one for you now, which is Southern Cross Electrical. Still good, still fine. Happy to hold. We need to see some price action. Yeah, we've got a bit of supply here. I don't think it's a deal breaker. Look, it's not as horrible as that up and down one we saw before, but watching for lower peaks, that'll show us supplies building. Don't want to see it really close beneath that lower shadow. That wouldn't be ideal, and certainly not beneath the short-term uptrend. Happy to hold what we've got and need some confirmation on levels, really. We need some extra levels to determine what we're going to do next. That's one of the trickier ones I think I've been given tonight, just given the circumstances there of that gap and then that really odd sort of pullback that it's having. I think we're done. Really detailed. Thank you, Matthew. I think we're done. Okay, no other complaints. Not complaints, but other requests coming through. Let's head back here and do the disclaimer, which says that everything we've talked about tonight, it has been general in nature. It has no reference or understanding of your particular needs. So before acting upon it, consider those very carefully or seek help from a financial professional. Trading's risky. We've seen stuff that we thought looked good, last week, and then this week it's completely turned around. We've had to take some action. That's the point of what we do. We take action. We have our points of no return, ladies and gentlemen. That's the beauty of this model. It's not, should I, might I, what about the dividend yield? Some talking head on TV told me that it was good. It's no. There's the point of demand. We've closed beneath it. The candle is black. It's a point of no return. It has been a pleasure chatting with you tonight. Hopefully you enjoyed the session. I certainly enjoyed delivering it to you, and we'll be back next Monday at the same time. All the best for your trading and investing. Until then, bye-bye for now.